How do you pay yourself from your LLC? Common question I get from individuals who've set up that LLC for their self-employed business, but now they want to know, how do you actually pay yourself from your LLC? And the answer is really very simple. First of all, you're going to have your own bank account for that LLC, and that's where all your money goes. And that's where you spend your expenses out of. And then what's left over is that's your money, that's your income, if you will, in your business. And the best way to get that out of the business to you personally is to simply transfer that money, either do a direct bank transfer. You can write yourself a check, you can Zelle it. The actual method of how you send it from your personal account into your business account doesn't matter. It's really just a function of moving it from that business account into your personal account. And that's all you really need to do it. We classify that as what we call an owner's distribution. Uh, you know, call it by a different name if you want. A draw, owner's draw, a dividend. It doesn't really matter. There's technical terms to all that, but ultimately it's a distribution of your profits from the business to you personally. Now, one question around this that I get a lot is, how much should I take out? Should I leave money in at the end of the year? Should I take it out? Is there timing issues to take out with it? And ultimately, the answer, it doesn't really matter. You are taxed on the profit of the business. So you're going to be taxed on whatever income it was you made, and then less all those expenses or deductions you take against that income. And so whether you leave that money in the actual business account or transfer it out to your personal account is not going to impact your taxes. You're still going to pay tax on that net income amount. The only difference might be when it comes to being an S corporation. So if you are taxed as an S corporation, and if you don't know if you're taxed as an S corporation or not, you need to talk to whoever's preparing your tax return. Kind of one of the things to note, if you're filing a separate tax return for your business than your personal, then you're probably an S corporation. And what does that mean? Why am I bringing it up when I'm talking about paying yourself? Well, that's because as an S corporation, one of the requirements that you must do as an S corporation is actually pay yourself a reasonable wage or a salary that then issues you a W-2. And so, in addition to those owner distributions we talked about, we have to actually issue some of that as payroll. Now, there's two ways we can go about doing this. So one, you can actually hire a payroll company and issue yourself paychecks on some sort of regular basis, weekly, monthly, even quarterly if you want. You can pay a payroll company to do all that. What I do with my clients as part of what I provide in my services is I just have them do the same as we talked about earlier, right? Just transfer the money as you earn it, and you see fit to take money out of the business, transfer that out of the business to the personal. And then quarterly, we have to come in and file payroll tax reports on a federal level. If you have state issues, payroll, I should say, that might be different, and you want to know that in your particular state. But at the federal level, we have to file what's called a Form 941. It's a quarterly payroll tax report. And that filing that really serves the purpose on a quarterly basis of paying payroll. And then at the end of the year, we issue the W-2. So throughout the year, they're going to pay themselves. My clients will pay themselves just by taking money out of the business account and putting it into their personal account. And then each quarter, we go back and look at how much did you take out? And then from that, we look at, how much money did the business make, how much they took out, all these factors, but we come up with a number of what they took out, because we don't want to pay yourself more than you took out, but up to some amount of that distributions you took, we're now going to essentially reclass as payroll. And we're going to put that as our wages on the 941. We're going to calculate out the payroll taxes related to those wages, and we're going to pay those payroll taxes when we file those quarterly payroll tax reports. And then at the end of the year, we'll file the W-2 related to that. And that's how we get around it. It makes it very easy on the clients. They don't have to do anything different during the year. They don't have to think about how much is paying themselves when they pay it. We just have to have that conversation once a quarter and then file the payroll tax and pay the payroll related taxes with it. It's an easy system, easy way to go. Again, you can just pay a payroll company to do that for you and pay yourself a portion through that payroll company and then pay yourself some directly out of it. It just depends on what you want to do and how much administrative thought you want to put on through the end of the year. The reason I like doing it after the end of the quarter is we know how much we made that quarter. We don't have to guess at the beginning how much we want to pay ourselves. We just pay ourselves whatever we can throughout the quarter and then come back and do that quarterly payroll tax. But the idea behind it, pay yourself directly from your business account to your personal account. Don't commingle your funds and start paying personal expenses out of your business account. Just transfer the money into the personal account. Then you can go pay those personal expenses. All right, hope that's helpful.